So that's what we're in that same program as where you are in regards to that.
Well, I just
Just
happened to tune in because it had caught my interest. So we'll
yeah,
see what y'all have to say.
very cool, very cool. Alden, you can take it away.
Yeah, so we're here at 3 o'clock here at the National Real Estate Investor Summit here in Ohio. Flew into Kentucky, had a long day of travel yesterday, but we're actually here at the event. We're booth side here. Got a Advanta IRA actually right next to us. Saw Larissa at Dealmaker the other week. That was a cool little connection. But everyone's kind of in the education seminars and such right now. But this is Mobile Mailbox Money, the mastermind that we do every week at 12 o'clock Pacific time. It's free to join. It's every week. We invite our investors to join, so people kind of trickle in and out of the Zoom today. But more than happy to answer any questions or any due diligence items, or really just kind of go over our deal flow right now. A tremendous amount of opportunity that we have, not only in manufactured housing, which is our primary business, buying and seller financing at a double-digit interest rate, but also new opportunities available that we have in 65% loan to value or less with the new debt on second lien positions in single family residence located in investor friendly markets. So we are happy to unveil those opportunities, and we give a back office view of what that looks like. Normally we have our partners available to bring on those deal flow, but we have one that we're actually consummating here in the next 2 weeks. Quick little house cleaning. We just came back from Dealmaker, like I mentioned, in Dallas. That was a great event geared towards due diligence checkboxes and implementation to private lend, become a private lender out in the market. Met a bunch of people there. We had Arizona Real Estate Investors Association over the past 2 weeks, and we're here in Ohio. Happened to find out about this event on Monday, so we ended up doing the bonsai out here to the event, and a lot of other affluent individuals that we've talked to here at the event, from Goodwin Yee to Andy Teasley to Larissa here at Advanta IRA, to multiple other connections that we've made. Had a couple people sign up on our list. So we're just happy to be here, blessed to say the least. I know we're going to talk about a couple of our deals and some structure, but I just wanted to mention that today's brought to you by SilverCrest Opportunity Fund. You could invest accredited Reg D 506C and earn a 10% return for 1 year, 12% for 3, or 14% return for 5-year commitment, providing liquidity upon the expiration of your agreement. Great to have liquidity, at the end of the day, to be able to feel nimble in your strategy as we hedge in $30,000 to $120,000 assets. At the end of the day, it's not a $5 million exit that we need to facilitate in order to provide you the liquidity that you need in order to go live your life. So, a lot of opportunity that we're coming across. I got my partner here, James Guajardo. He's president of Win Mobile Homes, and we're here with Win Mobile Homes, Mobile Mailbox Money, and SilverCrest Opportunity Fund. That's 3 businesses that we actually represent. The first business was where we started as a licensed manufactured home dealer, buying and selling for cash, started seller financing, burying money in great cash flowing assets, but had to get nimble because we had other homes to go out and buy, rehab, and resell. So that started Mobile Mailbox Money, where we list our notes for sale, almost like a paper stack environment. That success in the note investment strategy has provided us the availability to start a fund. That's our Reg D 506C accredited investment fund, and we're hosting a myriad of diversification capabilities across, affordable assets in the nation. So, James, I know we have done a tremendous amount of transactions over the past 2 weeks, and we bring our deal flow to the table to kind of talk about. Do you have maybe 1 or 2 that we could talk about, for everybody viewing here today?
So, so this is going to be, we're going to be talking a little bit about, and I was just, before the Zoom call started, we have Foster is on the Zoom right now, who does mobile homes in Florida, and we're talking about his strategies and our strategies. Our business model really grew with the ability to offer owner financing on specific properties. That gives us velocity as a company by providing long-term investors a great return and at the same time gives us the opportunity to bring cash back so we could continue to grow and go. But our big thing, which I was telling Foster, is I hate to sell the entire note because our notes pay 14% principal and interest. Once a buyer gets qualified to actually purchase the home, they actually get double qualified. They get qualified from the park, and then we work on a qualification with them called Dodd-Frank compliance, which is a national third-party compliance. So we feel pretty certain, and our fallout rate is so low that we really want Foster, and I'm talking to Foster still again about it. We really want to keep for cash flow as much of the note as possible. If we could, we'd keep all of them. We'd keep 100% of the notes. But what's the reality? We have overhead, we need to earn a living, and we need to recash the company to go out and go do it again. So ultimately, what do we have to do? We end up having to sell the note. So as we sell the note, we found a solution, which Alden mentioned, is we started a fund, and the fund gives passive investors a great return while we're able to keep a small percentage of the note. And that's where most of our notes go. But at any given time, including right now, we've got a new note that's actually available. We start our notes, just to let you know, as construction loan notes. So that note either pays 10% with monthly payments or 12% deferred, and that's an annualized rate until that property gets rehabbed and ultimately gets resold. So, Sonny, I don't know if you're able to pull that up. Sonny works on our note side, and Sean, sitting next to Alden right now, works on our note side, and they take all the calls of investors and show investors what notes that we have specifically. We actually just changed our website, so it's mobilemailboxmoney.com. You can go to that site, register, and sign up. We literally just changed over to a Go High Level platform, so there's going to be some tweaking over the next week of getting it right. But I asked Sunny to see if she could pull up the link so we could show that. Are you able to do that, Sunny, or no?
No, it's not on the site right now, actually.
Okay, so we'll talk about it. We'll talk about the specific note. So let me just pull it up from my phone, if anything, just for the sake of time. So we deal with a couple different types of manufactured homes and parks. It's manufactured homes essentially is our lowest cost housing solution for Arizona, and it's a low cost housing solution across the country, especially homes that are in the park. There's been a brand new revolutionized interest in people living in mobile home parks, and gone are the days of thinking, well, whoever lives in that park, they have no credit. They're a bunch of, whatever, they can't afford anything, so they live in the park. Well, to tell the truth, most parks are institutionally owned, and they've really raised the bar on the qualifications within the park. So, Sonny, why don't you tell us what are some of the qualifications that we have to do, that they have to do, which they really run them through the ringer.
No more trailer trash. You have to you you have to have no bankruptcies, no open bankruptcies, no felony convictions, no evictions on your record. You have to have, in some cases, 600, 650, or even 700 credit score, depending on the park. And you have to have a debt to income ratio that indicates that your ATR, which is your ability to repay the loan, is within the range of the standards for our lending.
So that being said, when we actually train our agents on a regular basis, number one, when we do our marketing on Facebook and Craigslist and so forth, and somebody wants to buy the property, we have to go through them, right, Sonny? We have to go through them through the process. They have to get qualified to actually get approved to live in the park before they can even buy the home. And I'm sure, Foster, they do that in Florida because there's the same institutions that own it in Florida and across the country own it in Arizona. So
The
that's the
park,
first qualification. Go ahead.
the parks are really looking to make sure that you don't have charge offs on your credit report for utilities or for an eviction from a rental or something like that, that they are going to make sure that you're going to be an upstanding citizen in their community, as well as the safety of making sure you don't have a felony conviction, so you're a good neighbor, those kind of things.
Yeah, so
That's not the financial part of it. That's the neighbor part of it.
so the parks, I would say 95% of them are institutionally owned, and they all kind of run the same guidelines at the end of the day. as Sonny mentioned, a 600 plus credit score, et cetera, no felonies, no active bankruptcy, et cetera. So once they get approved with that, then we go through a separate sequence of getting them qualified in-house underwriting. And Sonny, why don't you tell them a little bit about that?
So depending on whether you're employed by a W-2 or whether you're self-employed, those criteria are just slightly different. If you're a W-2 employee, you need to have your last 2 years tax returns as well as your last 2 pay stubs. If you're self-employed, you still need some tax returns as well as your last 12 months of bank statements.
So as they do that, the whole premise and the benefit of that between getting qualified at the park, and then they have to go through qualifications with us to get the note. The cool part about that is that once they're qualified with us, and we run them at least through Dodd-Frank compliance and validate whether they're approved or not, then we set up a 14% interest note and get them approved to actually purchase the home with their down payment. So
We
what
also
is the
calculate, just say one more thing, we also calculate what is their amount of their payment going to be with the 14% interest, with the payment that they're making on the note, as well as the payment for the lot rent. Do they make at least double? That's like one of the first qualifications that the agents do, is to make sure that they bring in at least double what their payment is going to be on their house every month.
So yeah, so if I was an investor sitting here, Angela's on here and we were messaging earlier and she was on last week. Hello, Angela. Anyway, the coolest part about this whole thing is that we're serving up on a platter essentially a double qualified buyer. That's one, a home that has been remodeled, and we have the after photos of all the rehab on the specific property. So for a note investor, the chances are of a successful note investment is based off of somebody making their payments properly, making those monthly payments. And our terms go to 20 years. So our biggest thing is that the challenge for us, even internally, is wow, we did all this work, we found the property, we rehabbed it and did a month or two or whatever, however long it took us to rehab the property, then found the right buyer to go into a long-term note, and now we're going to sell the note for long term. So that's why we set up the fund, Foster. We set up the fund. So yeah, even though we're selling the note, we're getting to keep a little bitty portion of that interest. It's kind of like bifurcating or doing a partial on a note. It's kind of the same thing essentially, but we put it into a fund where, like Rodney Madison just came on, he's done investments with us before and is looking at another note right now. The benefit of it all, as you're an investor, you run out of cash at any given time, and you have to go seek other capital from friends and family and convince them to go into these specific deals. But the biggest piece of it all is that it's all wrapped up in a bow and completely done with a low specific fallout. So it's pretty exciting. The way we just kind of fell into this business, by the way, because I was doing ground up construction of custom homes and small multifamily and land investments. And actually, at about 8 years ago, I was trying to get my son, Alden, who's on here, who's my partner. I was trying to get him into real estate, and I was trying to figure out a way. How do we do it when even 8 years ago it seemed like it was pricing was too heavy at the time? Well, now pricing is like doubled. Now it's really heavy in regards to a single family home. But where is there an opportunity across the country to get into real estate investment at a cost effective manner? Is manufactured homes and parks, or you call it mobile homes and parks. So it's still available across the country. My voice is finally getting a little bit better. I can actually kind of talk right now. It's been out for a little bit, but we think it's a greatest opportunity. And in Arizona, it's one of the top 5 markets in the country to invest in. People are moving. And by the way, what does Arizona doesn't get? Arizona doesn't get
Hurricanes.
earthquakes from California, and it doesn't get hurricanes from Florida. We've looked at Florida a couple times about doing business in Florida, and that's just always been a big thing of, man, just as soon as we buy a home in a park, and I've got a funny kind of story about that. Alden and I went to Orlando and spent the weekend looking at some of the parks about possibly investing in that market. And I'm telling you right now, we got home on Sunday, and on Sunday evening on the national news, they said just outside of Orlando, right where we are at, they were showing a mobile home that went up in the air and flipped twice in the air and landed back on its side. I was like, okay.
That's a great thing to even talk about in itself, that, in the case that were to happen and you owned the note on a property like that, there's insurance in place. And if that borrower fails to pay their insurance, we have a forced place insurance program. Obviously, we're going to mitigate our risk entering into markets like that. But let's say hypothetically that Arizona were to get hit by a tornado or something crazy. At the end of the day, we have insurance to be able to facilitate the safety and non-loss of capital in that component by being listed on proper insurance policies. Definitely a crazy story, and it's a frequently asked questions of like, hey, what would happen if that were to happen and I owned the note? Or maybe the borrower had a fire in the kitchen and the whole house burned down. Those are definite possibilities that could happen at the end of the day. And knowing that there's an insurance policy to protect your capital is a great feeling.
And that's one of the challenges with California and Florida investments is honestly that, as we all know, and Foster's shaking his head, that's a real challenge. And as much as I think at one point in time, one day, we're going to start investing in the Florida market because it is a very dynamic market. It's got its ups and downs and all. It's all over the place right now, I think, especially on single family homes, especially on condos in the Florida market. But, I think there's a place for us to invest in, and we'll find a little safe location to start investing in that market. But right now, there's so much business to be had in the Arizona market. We're still just barely even touching the amount of volume that we could do in this market. So this year, we'll probably create about 50 to 60 notes by the end of this year. And we're pretty excited about that. So out of those notes, we'll create 60 new opportunities for prospective investors to invest with us, whether they invest specifically in the fund or they invest directly on the note itself. And sometimes we will still sell the notes 100%. So that being said, we do have one note available. I'm not sure if it's 100% available, but it's a property that we actually just picked up. It's lot 123. I don't know if we're going to be able to show photos on it today, but the premise of it is this: on a construction loan, we'll offer 10%.
Remember, James, we want to quote monthly payments for a transaction like
Oh, yeah,
that.
thank you. Well, the premise is we have monthly payments. We have either a monthly payment amount because the sale on the property is prospectively about $55,000.
And we
And
borrow at what, 70% loan to value, right?
yes, yes. So
So
we're about
50,000 times
about
70,
40,000.
it's about 30 is 35,000. We could put that up to 40, but say it were 35,000. That note could be available at a monthly payment of $291 a month for a 1-year term. And upon your execution of a first right of refusal contract, which is the benefit of a construction loan in our environment, you provide us the capital to buy the home, rehab it, and offer it for sale on the market. In exchange for that, not only do you get a $291 monthly payment, but you also get the first right of refusal of the note that will inadvertently come available on that property. So say it were a $50,000 sale, right? You had a $35,000 loan on the property. The 50,000 with 5K down, the buyer borrower will put down in order to facilitate the loan. Your delta between your construction loan and unpaid balance is about 10,000. So you have the option to execute a first right of refusal, come up to the unpaid balance of the borrower, and secure a monthly payment of $559.58 for a 20-year term, which all of our notes are actually benchmarked at the same yield, but that provides you the availability to own that note in your portfolio from a construction loan. Now, what happens if that individual who lent the $35,000 doesn't want to take a 20-year note? we could roll them into another construction loan opportunity, keeping them in a sub 1 year contract. Really, we draft them at a year just out of convenience. But that provides you even liquidity potentially within a year. Yes, it's a construction loan. It's not a cash flowing consummated note itself. But some people kind of stay in that construction loan, parameter. They like the liquidity, they're around, available, whereas, the alternative is buying the note.
The benefit to that also is that the people who like to stay in the construction notes understand that Win is the borrower and we guarantee the payments. So there's no possibility of a borrower default.
Yeah, regarding the construction note. So we also have, which the fund may be taking them all, we've got a unique opportunity of 12 brand new manufactured homes in a park that are 2 bedroom, 1 bath, and a 55 and older park. We worked out an amazing sweet deal with the corporation that owns the actual park. And through our relationships, I was hoping Sean would be sitting right next to Alden and have him tell us about that.
Yeah,
I
so
don't-
essentially what had happened is we got approached from an agent that met with Sean, and they brought us a portfolio from a mobile home park owner who owns in the West Valley. They brought in 15 brand new 2023 units about a year ago. Placed them in their established community and marketed them for sale, and they sold about 2, maybe 3. The interesting component is they're in the business of owning the land and not so much a sales strategy. Well, that's where we come in. We got approached to buy this portfolio at a deep discount. They had it originally listed at $50,000 a door. We actually contracted and will be closing at $23,500 a door. We'll be acquiring, I think, 11 or 12
Well,
2-bed, 1-baths, and we'll be looking for, say, $35,000 loans on each. So say someone had $250,000, and they wanted to hedge across 9 to 10 doors. That's an area of opportunity for you to receive short-term, double-digit interest-bearing contracts backed by brand new homes in the West Valley, Arizona market in a 55 and older community. It's peak season right now. So ideally, our objective is to get them sold here this season and start them cash flowing on seller finance. You could potentially, take the first right of refusal of those, or you end up transferring your interest into the fund. But those are all going to go back up for sale at $49,900. So hopefully we'll make about a $20,000 margin on each property, equating to $250,000 in profit. And each door has capability of cash flowing about $500 a month. So that's $50,000 a year we made from one relationship. Yes, they are in an established 55 and older gated community, quality amenities. The management has new management now, and they're doing updates to the parks, so really excited about that deal. And actually, we did a full vlog, an 11-minute vlog for Mobile Mailbox Money that has about 400 views on it, where we talk with the manager, we walk through the units, we talk about the pricing, exit outside of the houses, really exciting stuff.
Hey, so Sonny, and I know Rodney's on and possibly looking for a note. It may be something that he may be interested in, because we may not take all the notes. We're specifically in the fund, and we could take anywhere from 35 to 40,000 on each deal. We can just discuss it. The great part about that is these homes are brand new, completely done, and I think those properties really are probably really worth about 60,000, 65,000. The park was just trying to get rid of them at 49, and we followed their suit. We may come out and sell a few at 49, but really we'll probably go 49, 59, 69, maybe even 79. They're brand new. You know what it cost the park to bring those in? They probably spent like 80,000 or more just to bring them in. So, but they made that decision. They're not in the business of reselling mobile homes. They're in the business of collecting lot rent. So that's why it works good for them, and works good for us. So Alden, I don't know if you can show. Can you show on your computer anything on those specific ones?
Yeah, I could probably figure that out here in a second. We're giving y'all backdoor view of what we're doing. Normally, people wouldn't be public about these deals and how we're finding stuff, but it's in the want for transparency at the end of the day. And hopefully that provides you, that much more comfortability within the program. Let me see if I can't get this up here real quick.
And Foster, one of our big things of working with mobile home parks, and even for Rodney to know, and even for Angela to know, we've been working the corporate side for 5 to 7 years, for multiple years. In other words, the main goal for us is not to talk just to the park manager, but how do you get to the regional and the corporate side? So we've done a tremendous amount of deals and have tried to continue to work. We've done a lot of crazy stuff, and with crazy stuff happens, the opportunity that the corporate has to respond to us. So that's really a big win for us. So this doing us doing a 12 home package with them is a super win that they're going to tell other institutions that own parks, and we just know that it'll keep us moving and growing the way that we want to grow. So this is the brand new home that we're talking about. I think the notes on these would be amazing to pick up one of these notes.
A big part of these relationships, though, stem from the fact that the parks see the type of work that you're doing. They see the level of rehabs that you're doing. They see the quality of the borrowers that you're bringing into the park. And they appreciate your contribution to their communities in the high level that you're doing that.
So normally we're buying a used manufactured home and we're turning it into something like this, and it takes us a couple months to get it to looking like this. But it's never going to be as brand new looking as a brand new home. So that's what's kind of cool about this, because we're grabbing normally like a 1980 and newer home or 1976 and newer, where this thing is, what is that, Alden, a 2024?
2023, I think it is. So they bought them,
2023.
brought them in. They paid probably $80,000 per unit. Sat on them for like a year and a half. Sold, I think, 3 of them at around 45 to 49.99. And lack sales staff at the end of the day, And we see tremendous opportunity for us to be able to get a deal like this. It's like, I don't know. We've honestly never seen a deal like this.
So we've got a lot of opportunity coming in, and we're always looking for more note investors that are looking for short-term as well as a long-term return on their investment. And this is a great package. This is a great opportunity. We're even negotiating with this company on a double wide that they have left over and trying to see what we can do on that. So that's probably one of the best views that we could be showing to show you guys the quality of inventory that we're picking up. And at the end of the day, we're looking to do anything we can to provide a great return for our specific investors. So I think Alden's pulling up maybe the double wides that they have.
Let's check this out live. What does a due diligence look like for comping a mobile home on terms, right? And really, we want to see what matches or beats market rent, right? You got a 2-bed, 1-bath in the Maryvale market. They're around $1,300 to rent. 1,600, 1,500, 1,700, right? So let's talk real quick. If you don't have a mortgage calculator, do yourself a service and download Carl's mortgage calculator. So what does a seller finance component end up equating to on a mortgage calculator? So this individual is going to pay $50,000, $5K down over 20 years with a lot rent. I think it's $950. So it's $1,500 a month, right? For what they just looked at on apartments.com, they can actually own a brand new manufactured home in a gated community for all in, including the lot rent, the home payment, annual service fee at $1,500 a month. If we added insurance, I think that's like $100 a month. So say it's $1,200 a year to insure our position. There's a $15 monthly service fee. It's $1,620 all in. Insured, own the house, monthly payments, lot rent. they match or beat market rent. In this case, they really match rent in the area. And now they have pride of ownership. They can actually paint a red door if they wanted. They can make a home. Those are all areas of real understanding to be had for the hedge. The hedge, not only in the affordability of the asset, but also, what is the buyer borrower's alternative? If they were to just walk away from this home, how likely are they to find a comparable property for what they were paying in rent? And that's, a bare minimum of what they would feel, available. They would want to own at the end of the day. And what's the availability to own here in the Valley? It's virtually non-existent. I think nationally, they said average single family residences are $400,000. So for that individual, they now own a home. They were qualified. And, like you see on apartments.com, it just kind of shows how we reverse calculate our end price point. We could try and charge maybe another $10,000, but at that point, it starts to get a little bit higher of the affordability. So, for us, we're really looking for high volume of transactions, quality paper with underwritten borrowers, in desirable areas. So that was just a great little back office view.
So Alden, tell them where you're at right now.
So again, we're here at the National Real Estate Investment Summit from the Ohio Real Estate Investors Association. So we're members of Arizona Real Estate Investors Association. They meet every second Monday of the month at venue 8600 in Scottsdale, Arizona. If you need a reason to come out to the Valley, definitely come to that. Shout out to Mike Delpreet, the owner. We worked great with them. A lot of great benefits received, but we just made it back from Dealmaker the other week. Like I was mentioning, actually, I met Foster at Dealmaker of all things. So, we're out here rubbing shoulders. I think we got another 10 people on our list. Sean's out here still talking to people. So we'll be out here for the next 2 days. If you happen to see this, don't hesitate to come by and, say hello if you're at the event. But, peddling the opportunities that we have here today.
Did you see Goodwin Yee? I saw on Facebook that he was
Saw
there.
Goodwin. I saw Andy Teasley. Saw a couple other people in the industry. We'll leave their names nameless. But yeah, just a lot of action. Not only do we have these manufactured home notes hedging in a Warren Buffett investment strategy, we now have some new opportunities in second lien hypothecated notes, which means we pledge positions on seconds at 65% loan to value or less. We're doing our first deal actually in the Chandler market. James, if you want to just talk lightly about how we're stepping through that process, and ultimately, hopefully we can close that one out.
So we had an opportunity brought to us from two prospective partners that are in Florida. These guys are in Florida and they work the foreclosure market across the country. And we met them at one of the note expos that was going on about 6 or 8 months ago. Well, from that, they turned us on to this opportunity that they get a tremendous amount of notes on second lien positions on single family homes where the debt to income is about 65% of value. So we'll use Florida as a market. We could do Arizona also, but we'll use Florida because they're based in Florida and they get a lot of Florida deals. So let's say somebody owns a home in Florida, regular single family home. They bought it for 100,000, 125,000, like 10, 15 years ago. What's that home worth now? 250, 300,000. They probably have a 2 to 4% interest rate loan on it, but for some reason something happened in their life. Their payment's probably $1,200 a month, like half of what market rent is, or close to half of market rent. But something happened in their life where they went behind and now they're in foreclosure and they've got some credit card debt or whatever, and they need help. And it's really kind of considered like a bailout loan, a prospective bailout loan. So these guys came in and created the opportunity and brought us that opportunity of saying, hey, there's tens of thousands of people that are underwater for whatever reason. They lost their job, something happened, and they're in foreclosure, and they need a little bit of capital, and they've got so much equity on their home, they want to do everything they can to, and we want to see how we can help them out. So the summary of our program, and we're still working it out for the Florida market because you have to get specific licensing to get approved, and we want to make sure that we're doing it correctly. So over the next 2 to 3 months, I'm sure we'll get it all worked out. But essentially, we're going to be providing second lien investments to those people, making sure that today's market value, the as is value, is no more than about 65% of the current market value. Because remember, they only owed about 100 and their house is now worth about 250 and they need about 20, 30,000 just to give them a breather. And now all of a sudden the opportunity comes back in. And as we talk about it, you can tell, you can clearly, if you think about it, there's a tremendous amount of people, hundreds of thousands of people, or millions, you could probably call it, they got that 2 to 4% interest rate, and their home over a period of 4 or 5 years, like doubled in price. And that happened here in Arizona also. So we're doing everything we can to see how we can create an opportunity. It's not cheap. It's still a rate we charge at 18% to the homeowner on the second lien loans. It all goes through a title company, so we get it all validated, and we want to make sure all of our licensing is correct. So as of right now, we're ready to go for Arizona, and we have pretty much a green light with our licensing. We're finalizing the Texas market, and we're finalizing the Florida market, and possibly, I think, North Carolina. So as we go through that, we're going to be looking for investors that want to invest in secured notes that are no more than 65% of current market value, not future, not after it gets rehabbed. We're talking about in its as is state. We'll pull normally have an appraiser come, not appraiser, I'm sorry, an inspector actually come out and inspect the home and do an inspection point on it, make sure the home's there in the first place. There's actually physically a home, and make sure there's no major drama in regards to the house of the structure and so forth that is definitely worth the loan position. And then for most investors, the key point is we're going through title, or depending on the state, you sometimes have to go through a law firm like the state, like Georgia, you have to go through a law firm. So once we go through that, we'll go and make sure that the investor gets their secured lien position on the specific property, or the investor can invest in SilverCrest Opportunity Fund, which part of our fund will actually have capital available to invest in these notes. So it could be backed by the fund itself also. So that's kind of the big summary of it. And we're still working out some licensing equation, but we're really close to ramping this up in a big way. And so we're pretty excited about it because that would be a completely new division within the company, and it could take us into a whole different level of investment.
So what does the due diligence look like on these two strategies? Manufactured home notes, will you validate the borrower's underwriting, validate the lien position, right? Make sure that it was processed correctly, what rate is on the note, and is there taxes and insurance included in that program, right? So ability to repay is subject to that performance, the how the lien position was recorded, that's through the Department of Transportation. So you got your security, a couple items to check. In this new position in single family seconds, it's strictly asset based. Well, what does that mean? That means we're investing strictly on the equity in the property of that home. And our availability to do that to a primary occupant, a homeowner, as a homestead, has the availability to do so. How, right? How do we do that? Well, we structure an open-ended home equity line of credit. It being open-ended, they actually don't have to fit ability to repay. It's actually strictly on the assets value. So as we inspect the property, which is one due diligence factor, we get a either an appraisal or a broker's price opinion, a BPO, validate the first that it doesn't have escalation clauses and things of that nature. So we know what we're getting into at the end of the day. And third and fourth, we get our lien position recorded through a title office or an attorney, depending on what the local requirements are. And on top of that, we have a mortgage officer that actually processes the application. So 2 5-step due diligence check boxes. We're here today at the Alternative Investor Summit. Anyway, those are two kind of differences, a couple of check boxes. And I think the lack of confidence for individuals is a lack of due diligence check boxes. If you have your check boxes and those check, you get through all 4 or 5, however it may be, that's a leap of faith equation. At that point, you have to step out into the unknown, knowing that you did everything that a proper, intelligent investor would do in order to perform risk mitigated positions. This is an investment. There is risk in investment, but what's the terminology? You got to risk it to get the biscuit sometimes. So having that terminology and really us being here today every week to provide you some more comfortability, in the want for return on investment, those are worth its weight in gold.
I think as we've talked a lot, obviously, and thrown at different thoughts. I don't know if Angela or Rodney or Foster, if you guys have any specific questions. I think, just let us know if you have any questions even now, or you could give us a call later. Anybody have any thoughts?
James, I'm all sold on your plan on and how you manage the mobile homes. So I'm just looking to get my lender partners in line. That's
There
all.
you go. Rodney, you need to be bringing in that 5 mil, sleeping on it, waking up in the morning, 5 mil. I know you can do it. At the end of the day, what I realized, Rodney, is even Alden, and we put Alden out first in regards to going to events or attending a lot of events here in the Arizona market. You have to get out. You have to get out and rub shoulders to people and tell them what you have to offer. What I realize, what I really, really realize is that it's not really about the product that we have, although I think we have a great product because it's low cost housing. I think we have a great product. But really, if somebody asks me, what do you do for a living? My mentality is really changing that I raise capital for a living and provide investors a substantial return on their investment. So really, the level up on real estate, the level up is not that you're fixing and flipping houses or fixing and flipping mobile homes. The level up is what? You're really a capital raiser, and you've got to have the right story with the right product, with the right emotion behind it, because you got to believe it. You got to 100% believe it. You got to burn the bridge. You got to light the boat. You go on to a private island and you just burn the boat. You ain't going off the boat. So that's where we're at. We're not coming off of this boat, that we're raising capital. And I think that we'll raise 10 to 20 to 30 potential million, depending on how these second liens go. Our capital raise is the crux of having a successful business. Because if we can't bring in capital to do the deals, then we nominalize what we do as an investment company, as an investor, an individual person, or we could show multiple people what we're doing and show you everything that we're doing and let you gain faith and trust with us. And we want to replicate that with you guys so that you can go out and have confidence in the product that we're pushing, because we're doing everything we can to make sure that we do it the right way. But we have velocity behind us. We're doing a big velocity game. For us, we have almost 20 full-time rehabbers. We have probably 12 or 14 full-time back-end staff people, including Sonny, who works on the front line with us on talking to investors and showing them how to do deals. Sean Gibson is with Alden in Cincinnati, Ohio for the weekend, talking with investors, showing them what. There's Sean right there. Yo, Sean. Anyway, we work at it, but it all comes down to, do you have a quality product that has a definitive return that will provide the investors a safe investment strategy for them to move forward in what their long-term goal is what's the investor's number one goal? Don't lose money. Don't lose money and make money, right? Because in order to make money, you want to make sure that you don't lose it. So you want to put it in something as safe as possible, but that gives them the opportunity to have the highest potential return. That's why a lot of investors don't invest or put the money into T-bills or government things, because it gets such a small return that inflation eats it all up. And where's all wealth being built? Historically, over time, wealth is being built in real estate or certain functions of real estate. And low-cost housing is just a component with it. So we
James,
think
I do have
go ahead.
I have a question.
I have a question next then. Go ahead.
In line.
Before
Pick
I
a
have to
number.
go, because I go right into another meeting. So thank you so much for letting me go. Um, I've got other stuff going on, as you see me still working here while we're talking. Where does your first line of money come in? Where you make the purchase of your unit, your investment? And then is that the same people that convert over, or do you have to go out and get new money, sell off to know? I understand exactly what you're doing. So do you have this first pool, and then so the other part is you're all in at 50, but you're selling at 65, so there's a little bit of a spiff on that. I didn't catch it on the $49,000 home.
We sell the construction note in the beginning in order to do the rehab. And then if you're the investor in the construction note, you have the first right of refusal to take the note long term. Or if you prefer to stay in the short term game, you can roll your construction funds over to another property and stay in the yearly investment opportunity time period. Or if you choose to go long term, you'd have that first right of refusal on the property once it's sold to the borrower. You'll get a collateral package where you'll be able to review the borrower and determine if that's somebody you want to get into bed with for 20 years, as well as the final sale amount of the property. You'd put in the difference of whatever you need to pay between the construction term and the 100% assignment note. So usually people get into the construction note at 10 to 12% with the first right of refusal to take the 14% long term. So that's where that comes from. If you choose not to take it, we certainly have multiple investors who would like to go straight to 14% if that's the opportunity, if they didn't buy into the construction note. So a lot of options is depending on how long term you want to invest or how short term you want to be liquid. You can, like I said, you either roll over into the 100% assignment or you can go back to a different construction.
Okay, makes sense. Appreciate it.
Go ahead, Angela.
Yeah, I just had a quick question. First of all, that conference that you're at in Ohio is a great one. I've gone to it a couple times. Vina Jones Cox, she's fantastic, from Corey. Yeah, in any event, my question is, do you have a website that we could send prospective buyers to learn more about the company, aside from Mailbox Money, which seems more like it's your side of the business with dealing with us? Is that the same site that we would send our prospective buyers to?
Well,
Prospective buyer of what? Buyer of mobile homes or buyer of notes?
Either and or both.
So our mobile home forward buyer forward site is winmobilehomes.com. We're the largest licensed D8 dealer in Arizona.
Okay.
So they can go to winmobilehomes.com and even check out the homes that we have available. I actually have it up on the screen here. So we have our 30 homes available in the Arizona market specifically. We don't currently operate outside of Arizona. So all of those homes are located in Mesa, Tempe, Phoenix, Glendale, Apache Junction, and 55 and older, as well as all ages. If someone were wanting to buy notes, we take them to mobilemailboxmoney.com because they want mailbox money off mobile homes, right? And they can sign up direct on here, as seen on the screen, and learn more. Even a text chat box on the bottom right. Sunny actually monitors this here on the bottom right. So happy to answer any questions that you have. Sunny's very intelligent. We even have my books that you can buy, or a couple informational videos on SilverCrest that can be found on our fund website. So SilverCrestOpportunityFund.com or SilverCrestOpportunity.com. That's where someone can kind of learn a little bit more about our fund, the offerings viewed by accredited investors. They'll have to come in here and look at the portal. It's actually like a brokerage account. So they'll create a login username and upload their ID and third-party letter of accreditation, and then they can review the private placement memorandum and deal disclosures for each property. And if they're really just looking to kind of hear some curiosity, you can go to YouTube and just type in mobile mailbox money, and that's where we have 850 videos online. So from client testimonials to walkthrough videos to me going live at the event here today, all areas of potential to cure the curiosity.
Right. Okay. Yeah, if you could email or text those all out, though, that would be great because I'm not writing all this down right now.
Yeah,
But that would
happy
be
to do that.
helpful. And
I think,
go ahead.
James has your information, I think, correct?
Oh yeah. James has all my contact information.
Great
The
to
other
hear.
thing I was going to suggest for you, Alden, seeing as you're doing all the shows, is to check out National RIA. If you haven't already, they have an annual meeting, normally for leaders of the different RIAs around the country. And so it would be a great place for you to get in front of leaders and potentially set up.
And Angela, where's that at and when is it?
It's different. It could be in a different city each year, but if you want, I can text you a contact that I have at National RIA. I used to be a director on the board of Georgia RIA, and so that's how I got to attend a couple of those events and talk about great networking. And plus, like I said, you're with the leaders of these organizations, and so great possibility of getting in front of their specific groups, even if it is via Zoom, and kill a lot of birds with one stone, so to speak, at that National RIA meeting.
Getting insider insight into which events are the staples of the industry, that alone is worth its weight in gold. It's really tough to find information online regarding, how many people are really attending these events, and what kind of information am I going to get from it? Is it worth $1,000 or is it worth $750? Well, I know, just from our expertise, in the industry, the Alternative Asset Summit was a great one to go to. We've been to the Note Expo, and I'm just going to flash all my name cards here.
That would sound like it would be a great one for you all. But if you're trying to get to the real estate investors, each individual RIA is different as far as the strength and the following that they have, as far as investors, how many people attend the meetings, etc. So I used to set up meetings, speaking engagements for a tax sale guru, quote unquote guru, at these different RIAs around the country. And some would be great. They'd have, like Broward County has a great turnout. And then there's others that, you'd be lucky if 20 people were in the room. So,
Exactly.
You don't know until you know. But, if you're doing it electronically via Zoom, it doesn't really matter how many are in the rooms. You could set it up with several RIAs at one time, all joining in and have, especially if it's a free Zoom, which it would be, you should get a good turnout.
Yeah, no, all of that's definitely a gem. Some events I would recommend, obviously, Arizona Real Estate Investors Association, the Alternative Asset Summit, the Self-Directed IRA Summit. We've got Diversified Mortgage Expo, Paper Trail, and Deal Maker. And those are just a few of the ones that I've personally attended. And here at the National Real Estate Investor Summit here in Ohio, those are all worth, keeping on a list somewhere and, trying to make arrangements to get to at the end of the day. I've seen extreme value, to say the least. And I always love hearing about different events and associations. So I'd love to figure out about attending that National RIA, to say the least. Any other events that anyone's been to, happy to throw it around and see about us getting out there. And, for us, we do a lot of social media and podcasts. We're here live in the Mastermind. So, just definitely send that over.
That's something else, actually. On Facebook, there's a RIA leaders group that you might want to jump on as well.
Love it.
That's great info.
You're welcome.
So we're coming up, but we've only got about 5 minutes left. Anybody have any last thoughts or anything like that? Thanks, Angela. That was great info. And Foster, thanks for your input. That was awesome. And Rodney,
I have one last bit of housekeeping. I would like Rodney Madison not to get away today before we officially congratulate him for his retirement of 40 years with the FDIC.
All right.
Congratulations on your retirement, Rodney.
Thank you, Sonny. Thank you.
Yeah.
Yeah,
Hey,
40
Rodney,
years.
Rodney, now it's time to work and get some notes, man, for that retirement.
Yeah, well, that's the plan. I have to wait until actually next year to really benefit from my savings. So you wait. I'll be off the chain next year.
Uh-oh, there we go. Get ready. We're holding on. Let's put on the straps.
We're prepping him now.
Well, hey, everyone, appreciate you being here. We'll leave you with a quick video. You know, that's one step closer to financial freedom. What do we call that? That's what we call mobile mailbox money. Let's see if this will play.
Thank you for emailing me the invite. Appreciate it.
Thank you, everybody.
Oh,
I need to step out. Thank you again. Bye.
No audio.
well, we'll let you guys go. Appreciate you being here today. Contact us if you need anything at 602-888-CASH.
Have a great day. We'll see you. Thank you.